You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 15th day of July, 2025. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast is our live training room. So to get in there, you got to be one of our traders or taking the 1-week free trial. If you have not yet taken the 1-week free trial, when Michael joins us at the top of the hour, he'll walk you through it step by step a couple of times. Now, I realize today's already Tuesday, so you're thinking, well, if I take the 5-day trial, I'm going to get gypped out of some days, so I better wait till next Monday. Not true. Take the trial today. We'll get your indicators up and indicating today. Your trial will officially start tomorrow, and it will run through next Tuesday. 5 consecutive trading days. The weekend does not count against you. There's no credit card required to take the trial. And when you take the trial, you're not just getting access to the live training room, but you're also getting access to everything our traders have access to. In fact, we treat you like you were a member, a full-fledged passport holder, for 5 consecutive trading days, so that at the end of the trial, you can make a well-informed, intelligent decision as to whether or not trading is right for you. Now, to join this afternoon broadcast, there's 2 different ways to go about it. The best way, you only have to do it once, because this broadcast is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Go to mytradingiq.com, scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day you'll get an email about an hour before the broadcast starts. In the email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you'll immediately have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. But you don't have to remember all that, just youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 2,800 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, nor do you need to, but it's a great resource to have at your fingertips. And it lets you see how we've evolved over the years. youtube.com/CFRN. This is our schedule for each afternoon broadcast. Michael will join us around 1 o'clock Eastern. He'll give us a recap of what happened in the live training room this morning. Then we'll do a little live trading on the TradingView platform. But for now, we'll start where we always do with our daily devotional. Now, the topic that we're on is commitment to community. We're on day 4 of 5. Our scripture today is Genesis 2, verses 18 through 25, and I'm going to share it with you from the NIV translation. The Lord God said, "It is not good for the man to be alone. I will make a helper suitable for him." Now the Lord God had formed out of the ground all the wild animals and all the birds in the sky. He brought them to the man to see what he would name them. And whatever the man called each living creature, that was its name. So the man gave names to all the livestock, the birds in the sky, and all the wild animals. But for Adam, no suitable helper was found. So the Lord God caused the man to fall into a deep sleep. And while he was sleeping, he took one of the man's ribs and then closed up the place with flesh. Then the Lord God made a woman from the rib he had taken out of the man, and he brought her to the man. The man said, "This is now bone of my bones and flesh of my flesh. She shall be called woman, for she was taken out of man." That is why a man leaves his father and mother and is united to his wife, and they become one flesh. Adam and his wife were both naked, but they felt no shame. Again, Genesis 2, verses 18 through 25. So we've been talking about community over the course of this devotion. Again, we're in day 4 of 5. We'll wrap it up tomorrow. The bottom line is we need community. Connectivity is easier now than it's ever been. Through technological advances, we can all be connected to one another instantly. And yet, according to a recent AP report, Americans who have become less engaged with worship houses, community organizations, and even their own family members in recent decades have steadily reported an increase in feelings of loneliness. This goes to show that although we are more connected than we have ever been, with more people than we could ever imagine, we feel more alone and unknown than at any other time in history. God himself, after seeing all he had created and saying it is good, said in Genesis 2:18, "It's not good for the man to be alone." God made Eve because he recognized that goodness in creation could only exist when man was in community, not just with God, but with others. So God lovingly addressed Adam's need by giving him an equal counterpart. This goes a step further for Christians because of the simple truth that discipleship is impossible when we are not known. We were not designed to live in isolation, but to walk in community with God and with others. We cannot love God and walk in communion with him without loving others. Our true love, devotion, and service to others is an authentic demonstration of our communion with Christ. God's good design was for us to have communion with him, to be in life-giving relationships with one another, and for the world around us to be drawn to him as a result. We need community. The community around us needs Jesus. How we love him and how we love others matters. If you're feeling isolated or lonely today, turn off those screens and take a step towards real community. We're surrounded by people all of the time, our families, our neighbors, our social media followers. The list goes on and on. Yet the feelings of loneliness are on the rise. Take time today to ask yourself 2 questions. Do I feel alone? And do I believe that isolation is what God wants for me? If you believe that God has better things for you than feelings of loneliness, tell him how you feel and ask him to highlight the community around you that he wants to lead you into. If you're involved in a local church, how can you find community there? Remember, you were created for community. We are all called to do life together. Let's pray. Heavenly Father, we thank you for the gift of relationship and the beauty of companionship. You saw that it was not good for man to be alone, and you provided partnership and unity. Strengthen the bonds in our marriages, our friendships, and our families. Teach us to love selflessly and to reflect your design for unity and love. It's in Jesus' name we believe and pray, and everybody said, Amen. Amen, and happy Tuesday. Now, it's very interesting that, as we just mentioned, we're more connected at this point in history than ever before. You can type in a message into your favorite messaging app, and in the twinkle of an eye, it appears on the desktop of someone in China or some other far-flung place. Unfortunately, we feel like we're communicating with others, but you got to turn off the screens. You got to get out. You got to press the flesh. Talk to people. Do life together. And if you have kids or grandkids, do not let them spend 8 hours a day, which is the average time a child or teenager spends staring at screens all day. Sure, they're messaging back and forth with their friends, talking smack, sharing videos and pictures and all this other stuff. But think about it. Every time you take a picture or a video and put it on Instagram, you're so caught up in the act of photographing the moment or videoing the moment that you don't actually live in the moment. God created us to be here now. And that's a great book, by the way, from the 60s. Google it. Be here now. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is down 286 points. The Nasdaq's up 133, thanks to NVIDIA. The S&P 500 is down 2 points. But this one tells the real story. The Russell 2000, our man in the street, is down 21 points. That's almost 1%. In the commodity basket, crude oil is down 52 cents, trading 66.46 last. That's a drop of about 0.75%. Gold is down $25.20, trading 33.80 last. Silver, be still my beating heart, it's down 72 cents. Now, we've had this incredible rally, so we know that after an incredible rally, especially one that it stretches over several days, there's going to be a retracement. That's just how markets work. Silver's down 75 cents, trading 37.99 last. That's a drop of almost 2%. In the Asian markets at the close, the Nikkei posted a gain of 218 points. Shanghai dropped 14. The Hang Seng gained 386 points. That's well over 1.5%. And in the European markets at the close, FTSE down 59, the DAX down 100, the CAC down 41. Now, while the FTSE closed down 59 points, it did touch 9,000 for the first time in history. We'll talk about that a little more in a minute. So we had a mixed day in Asia. It was a red day for the UK. FTSE down 59, DAX down 100, the CAC down 41. And it's a mixed Radio Tuesday here in the US of A, with 3 of the major indices in the red. Now, the S&P is only down 4 points, but I think that might just be the beginning. The NASDAQ, that's the odd fellow today, it's in the green, and again, that has everything to do with NVIDIA. Let's take a look at the global news. For those of you who've ever been to Arizona and visited the Grand Canyon, there's an interesting statistic. People drive from all over the country to see the Grand Canyon. People come from Florida, from Maine, from Vermont, all over the country. They fly, and there's no airport at the Grand Canyon, so then they drive, or some people just drive. That's part of the experience. See in America. After all that travel, the average person, when they finally reach their destination at the Grand Canyon, guess how much time they stand looking at one of the 7 wonders of the world? 7 minutes. Speaking of 7 minutes, you know how much time the average father spends in conversation with their children each day? 7 minutes. That's a freebie. So why am I talking about the Grand Canyon? Firefighters in Arizona are battling a pair of fast-moving wildfires in and near the Grand Canyon. As of this writing, the Dragon Bravo fire and the White Sage fire have burned more than 55,000 acres of land together, roughly the size of Washington, D.C. The Dragon Bravo fire, started by lightning on July 4th, has destroyed up to 80 structures, including a historic lodge. It's on the north side of the Grand Canyon, and it's been there, I think, 100 years. Now, if you want to go stay there, you got to book years in advance to get a room, but no more. It's gone. Other structures that were lost: a wastewater treatment plant, which caused a chlorine gas leak. The blaze also forced the closure of the Grand Canyon's North Rim, a less popular area that draws in fewer than 10% of tourists for the rest of the year. It has burned around 5,700 acres. The White Sage fire, also caused by lightning, began July 9th, about 35 miles north of the Dragon Bravo fire, and has burned around 50,000 acres. Both fires are 0% contained as of this writing. Arizona Governor Katie Hobbs, well, that's a story for a different day, has called for an independent investigation into federal wildfire management after reports that the Dragon Bravo fire was initially treated as a controlled burn amid extremely dry, windy conditions. Well, they say as California goes, there goes the nation. Sweet. Crypto Week kickoff. The U.S. House of Representatives will begin considering 3 cryptocurrency-related bills today. The legislative push, dubbed Crypto Week, is expected to yield the country's first major crypto legislation. Bitcoin hit an all-time high yesterday, at one point trading above $123,000, amid promises of clearer regulations. Now, we all know that Bitcoins have been on a tear, just like silver. Markets don't grow to the sky. You get a leg, you get a retracement. You get a leg, you get a retracement. Sometimes it's a shallow retracement, sometimes it's a deep retracement. And that's why very few people have managed to hang on to their Bitcoin, because of the extreme volatility. The first of the 3 bills, the Genius Act, passed the Senate last month and is expected to clear the House before President Donald Trump signs it. The bill aims to regulate stablecoins, which I mentioned yesterday I'm no fan of, which are easy and cheap to transfer but differ from Bitcoins in that they are pegged to the US dollar. A second bill regulates the broader digital currency market, dividing oversight between the SEC and the Commodity Futures Trading Commission. A third bill limits the Federal Reserve's ability to create a central bank digital currency. Thomas Jefferson said, if you ever want to destroy America, create a central bank. Well, what do? We created a central bank. Now the central bank wants to create a digital currency. Pray that doesn't happen. Trump has positioned himself as a crypto-friendly president. His crypto investments are estimated to make up roughly 10% of his net worth. Tesla. The first federal jury trial against Tesla began in a Miami court yesterday, involving its autopilot driver assistance system, designed to perform basic maneuvers and alert drivers to upcoming obstacles. Most previous lawsuits against Tesla were either dismissed or settled out of court. This case centers on a 2019 crash in which a man was driving his Tesla Model S with autopilot engaged. As he bent to retrieve a dropped phone, the Tesla hit a parked SUV, killing a 22-year-old man or a 22-year-old woman and severely injuring her boyfriend. Their families are pursuing punitive damages against Tesla, alleging that autopilot malfunctioned and Tesla overpromised drivers about the technology's capabilities. Tesla's lawyers are expected to argue the driver was responsible for supervising the system, and present data showing his foot was on the accelerator before the crash. The trial comes as Tesla aims to expand its self-driving taxi service nationwide, which was launched a few weeks ago in Austin. We discussed that on the day it happened, and faces a second year of declining sales, with the last quarter's deliveries falling 13.5% year over year. Now, these Waymo driverless cars, man, they're everywhere in Phoenix. You can't go anywhere of any distance and not see one. It's the strangest thing in the world. There's nobody in the passenger seat supervising this thing. It's just doing its own thing. You can order one up just like you do an Uber. It'll show up at your house, take you wherever you want to go, and if you want, bring you back home. Nobody at the wheel. My. Wonder what Henry Ford would think about that. Well, let's move on to the Wall Street news. We had inflation numbers this morning, and oh my, the left's going to have fun with this. Inflation ticked higher in June, according to new government data released Tuesday, as investors continue to look for signs that President Trump's tariffs may be starting to work their way through to consumer wallets. See, they're looking for President Trump to fail. Now that in and of itself is a huge problem, but we won't go into that. The latest data that we got this morning from the Bureau of Labor Statistics showed that the Consumer Price Index, or CPI, increased 2.7% on an annual basis in June, an uptick from May's 2.4% gain that was driven by a reversal in falling gas prices. Economists had expected headline inflation to come in at 2.6%. So we were 0.1% above expectations. And now the sky's falling. Oh me, oh my. President Trump announced today that his team struck a deal with Indonesia yesterday. He said details will be forthcoming. It's a great deal for everybody, including Indonesia. Trump posted on Truth Social, "I dealt directly with their highly respected president." The announcement comes after Trump unveiled a new batch of letters to over 20 trade partners outlining tariffs on goods imported from their countries beginning in August. The letters set a new baseline tariff levels at 20 to 40%, except for a 50% levy on goods from Brazil in a move that waded into the country's domestic policies. They're mistreating the ex-president. From Reuters, Apple signed a $500 million deal with Pentagon-backed MP Materials for the supply of rare earth magnets, an agreement underscoring corporate America's growing alignment with U.S. industrial policy support for critical minerals projects. MP is up 23% on the day, based on that news. The multi-year supply deal is part of a broader push by Apple to bring iPhone production to the United States amid a push from the Trump administration to produce fewer electronics in China. Man, you gotta know those MP shareholders are feeling pretty good today. They can't wipe that grin off their face. From Bloomberg, oil fell as the dollar strengthened and traders doubted U.S. President Donald Trump's plan to pressure Moscow. Boy, it's easy for you to say. Would disrupt Russian exports. That's a confusing statement. I read it several times and I thought, you know what? There's people in the audience smarter than me. They'll figure it out. Blackstone plans to invest $25 billion in developing data centers and power plants in Pennsylvania. Blackstone has identified several sites to build the energy-intensive centers, adding that the private equity firm also plans to partner with an electric utility to build multiple natural gas power generation facilities to fuel the data centers in Pennsylvania. I posted to the Breeze channel this morning news about Bill Gates' smart city out in Tonopah. It's about an hour west of Phoenix. I went out to visit it Saturday morning. They've not broke ground yet. And last from Wall Street, but I do have one more piece of news that you really need to hear. JP Morgan Chase's CEO, Jamie Dimon, the modern-day Willie Sutton, said yesterday that the independence of the Federal Reserve is absolutely critical for Jerome Powell and whoever succeeds him as chairman of the central bank. Yeah, because they're a bunch of thieves. They have been since the inception, and it's why America is trillions of dollars in debt. We can barely keep up with the interest payments, but yet the Fed refuses to lower the interest rates. Playing around with the Fed can often have adverse consequences, Dimon told reporters after JP Morgan reported its first quarter earnings, adding that it can produce the absolute opposite of what we may be hoping for. Wall Street is paying close attention to the drama unfolding in Washington, D.C., as President Trump and other White House officials intensify their pressure on Powell to lower interest rates and conduct a search for his replacement. Now, there's rumors he's going to resign, but I think just as part of the grudge match, he's going to stick it out till his last day, which ends in May. Hallelujah. So will we see any rate cuts between now and May? Probably not. Now, that's not the official word on the street, but that's kind of where my belief is, for whatever that's worth. Now, while we're speaking about the Fed, I mentioned this yesterday. The Fed is getting a Palace of Versailles renovation. The planned renovation of the Federal Reserve's office buildings will cost $2.5 billion and include rooftop gardens, skylights, water displays, and more, according to planning documents reviewed by the New York Post. Construction will focus on the Mariner S. Eccles Building and Federal Reserve Board East buildings in downtown Washington, D.C. The buildings will be outfitted with Georgian white marble, and there will be a new elevator system that drops Federal Reserve Board members off in their private dining suites. The Senate Banking Committee held a hearing June 25th to investigate the renovation, where Federal Reserve Chair Jerome Powell testified under oath that there's no VIP dining room, there's no new marble, there are no special elevators, there are no new water features, there's no beehives, and there's no roof terrace gardens. On June 30th, the Post published a follow-up story with direct excerpts of the building plans filed with the National Capital Planning Commission. According to the Post, the plans state the private dining rooms on level 4 will be restored, and the governor's private elevator will be extended to discharge at the dining suite level. There's also a mention of vegetated roof terraces that will become urban wildlife and pollinators, and new marble and water features. And it's in the plans. Now, the fact that Jerome denied this under oath, what's really going on? Regardless of whether Powell or the Post is correct, it's clear the Federal Reserve renovation will be a huge expense for taxpayers. The project was supposed to cost $1.9 billion when it was approved in 2019, but the Federal Reserve blames the cost overrun to $2.5 billion on the rising cost of building materials. Another reason to lower the rates. Senator Tim Scott from South Carolina compared the project to the Palace of Versailles. During the Senate hearing, Elon Musk said the Department of Government Efficiency should investigate the project during a White House press conference in May, asking, I mean, what do you get for $2.5 billion in redecorating? It must be incredible, said the world's richest man. Now, you can search all federal, state, and local salaries and vendor spending with the world's largest government spending database at, write this down, openthebooks.com. openthebooks.com. The planned renovations come at a time when federal buildings have $370 billion of needed repairs, including military barracks that are at a risk of sewage overflow and have broken fire alarm systems. Federal buildings should be designed with practicality in mind, not luxury. If the Federal Reserve is focused on the latter, Congress may need to step in. I say it's long overdue for Congress to step in. Now, Jerome has called for there to be an audit of where every dime has gone. Okay, well, let's see what they find. All right, That's it for the Wall Street news, the global news. Let's go to the local news. Logic 247. That's our 24/7 around the clock Emini alert service. Back from a 2-week hiatus. We're currently in week 363. We've now issued over 20,000 individual handcrafted alerts. In fact, we've issued exactly 20,034 as of the recap this morning at 8 a.m. Eastern, but I did put out some additional alerts today. So Valerie will update the recap this afternoon, early evening, as she does each and every day. At the time of the recap, since the markets opened Sunday night at 6 p.m. Eastern, we issued a total of 34 alerts. 2 never triggered. One of those was a duplicate, my fault. Still waiting on the outcome of 10. That's before the ones I put out this morning. That gave us 22 actionable alerts, of which 1 or 5% would have been stopped out based on simple market structure and a very simple process that we teach all of our passport holders. Now, over the 361 weeks, which brought us up to that, I went on hiatus when we hit the 20,000 mark. And I kept telling everybody, we're approaching 20,000. Pay attention. Use the alerts for the purpose intended to learn how to read the chart. Now you're getting another opportunity. Okay? Over the 361 weeks and the 20,000 alerts, what we averaged on a weekly basis was, I always said 20% or less of the alerts being stopped out. The actual numbers closer to 12%. But this week we're sitting at 5% so far, but the week is early. It's only Tuesday. We still have the rest of the day and 3 more full trading days to go. Now, the logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Long before there was a Logic 247, we had our original alert service, the concierge trade alerts, and they're different. The biggest difference is they don't come out around the clock. Well, there's a lot of differences, but the main difference, I guess for the purpose of what we're discussing now, the CTAs are published 5 minutes before the Globex Open each evening. Tuesday session began last night at 6 p.m. Eastern. On the days when I'm not going to be able to get them out 5 minutes ahead of the open, I put a note in the discussion group. So what this means is that all of our traders, all of our trial members, had all of these targets 5 minutes before the market opened. The ES, the Dow, the Russell, crude oil, the NQ, gold, and silver. So as we go through the individual markets and you see those targets on the charts, just remember, if you're one of our traders or on the trial, you had those numbers 5 minutes before the market opened. Now look at here. We talked about it and talked about it. When blue and climbing gets directly above price, it becomes resistance in most cases. Now we ran up and tagged it earlier in the session, but look where we are now. Back to support at the BSL or the black step line. Right below that, we also have additional support at the 50% of extension. But we are well off the high of the day. High of the day was 63.43. And we're now trading somewhere around 63.07. We'll see it when we go to the 30-minute chart. Now, the daily chart's important because institutional traders, I'm talking traders at Goldman Sachs and State Street and BlackRock and all the other institutions, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. So I encourage you to spend 2 minutes with the daily chart of whatever it is you're about to trade before you drop to the smaller time frame and actually start trading. Number one, it gives you a free look over the shoulder of those deep pockets that actually move price. And it enables you to identify major areas of support and resistance days ahead of time, weeks ahead of time, months ahead of time. Today, if we can break through the black step line, last few times we visited the 50% fib extension, we found support. Now, I told you that the BBC would continue to rise if we continued to consolidate in this narrow range. 1, 2, 3, 4, 5, 6, 7, 8, 9 consecutive trading days. We've been consolidating sideways. If we close where we are now, or lower, then I suspect when the markets open tonight at 6 p.m. Eastern, blue and climbing is going to turn to red and falling. And sometimes when blue and climbing turns to red and falling, it looks like this. Now the green line's called the BBC. It stands for Bull Bear Cross. When price crosses below the green line, like it did on February 21st, we're bearish and we're looking for lower prices. But when price crosses back above the green line, as it did on April 24th, we're bullish and expect higher prices. Pretty simple. But there's something even cooler. Price always reverts to the mean. Doesn't matter what strategy or methodology you're using, this concept is far bigger than any single methodology or strategy. Price always reverts to the mean. In our case, the mean is green and it's called the BBC. You get a leg and a retracement, a leg and a retracement, a leg and a retracement. You'll notice that the pullback holds more often than it doesn't. When we finally crossed back above the BBC April 24th, the first pullback to the BBC held. The second pullback held. The third pullback held. The fourth pullback held. And are we now overdue for a pullback? We certainly are. However, if we continue to consolidate, then the BBC is just going to rise to beat price. And that's a completely different dynamic than when price just drops to the BBC like it did here. So there's no doubt in my mind that price is going to come back to the BBC. I just don't know when, and no one does. No one knows what's going to happen next in the market. It's simply not possible. I know there's algorithms and there's AI and there's all kind of stuff, but there are too many factors involved in the world of trading to know with certainty what will happen next. However, if you have a good strategy, a good methodology, and a good set of indicators, you can know with a high degree of probability what the next high probability move will be. Now, as we learned over 20,000 alerts, 20% or less of the time, maybe 12%, the market is going to do something other than the next high probability move. But in order to understand that and see that and trade with that, you got to learn to read the charts. So try spending 2 minutes with the daily chart of what you're about to trade before you start trading. Whether it's stocks, futures, crypto, Forex, ETFs, do it for a month. That's 20 trading days if there's no holidays. See if it doesn't make a difference for you. If it doesn't, then just go back to doing what you were doing before. Now, all the alerts, both Logic 247 and the Concierge Trade alerts, are created on the 30-minute chart. There's nothing magic about 30 minutes. It's just the time frame I chose years ago, and I've stuck with it. If it ain't broke, they say don't fix it. Now, these are the targets that all of our traders and trial members had 5 minutes before the market opened last night. Now, what's this over here? Back when I was drawing you windows of opportunity, this is Tuesday, this is Monday, this is Friday. We drew a 4-point window of opportunity. You only need 2 points to get your goal for the day. It didn't fill on this day. Didn't fill yesterday. It filled today. That's called planning your work in advance using simple market structure. Now this window above it, it didn't get completely filled. The top of the window was at roughly 63.36, and this high was 63.35 3/4. So we missed it by a tick. Now that window was based off Thursday's price action. So this was the opening candle last night. Price came right down to the BBC. Remember, price always reverts to the mean, and the pullback holds more often than it doesn't. So we open above the BBC, but we have red and falling overhead. Above the BBC is bullish, but red and falling overhead is bearish. So we consolidated for hours at the BBC. And then at 21:30 last night, bang. We put in that high. And that other window that I was showing you, that filled several times again. So did this one. Right here. And again here. You get the idea. Now, when we hit resistance, top of this window, well, again, we missed it by a tick. It's based off that high right there. Oh, what was it? 63.35 half. Resistance will always send the market looking for support. So we came back to blue and climbing. The markets were very bullish. We didn't make it all the way back to the BBC. That's an indication when price can't make the complete pullback, fully revert to the mean like it did here. That's a bullish signal, and off we go. And then we got a shallow retracement. Now, this is bearish. When you're looking at a 30-minute chart, you see all these wicks sticking up in the air? That's an indication that you're about to see lower prices based on simple market structure. And look what happened. Down we came. Now at the zone here, we did catch a bounce and the pull back to the BBC. See, this was a green candle, right? Hit the BBC resistance, and look where we closed. Right at the top of the long target. Then we dropped below, and look where we found support. Right here, from this shelf that was created overnight. Support sends the market to resistance, and again, we're hitting the long target. Resistance will send the market looking for support. So we just took out this double bottom right here. Now look left. What do you got? A weekly trading zone. The weekly trading zones are published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. When price rallies up to a weekly zone, we expect resistance till proven otherwise. And when price drops to a weekly zone, as it just did, the zone is 62.95/96. And the low of this candle, 95.5. So we'll see if this zone is going to hold. But again, going back and taking a look at the daily chart, you see we're below the black step line now. We were resting on it at the beginning of the broadcast. So look for support around 67.24. If we take that out, then look for support at yesterday's low, which was, come on, 62.59.75. All right, Michael is here. So we made it through the ES, went up. See, we traded through the zone, but now there's still 3 minutes left in the life of this candle. So where the candle closes is very important. We have the short target here, and then we've got a bullish cross here that led to an extended move. When that happens, the first time price revisits that area will almost always be good support. So jot the number down, 62.77. First 86, then 77.
What's the BBC at on the daily?
The BBC on the daily is at 62.18.
Okay, I was just curious if they were in the same place.
So we will pick up with the Dow when I come back, but right now Michael's going to give us a recap of what happened in the live training room, and then do a little live trading on the TradingView platform. Then I'll complete the recap of the CTAs, and of course wrap things up with our good word for the day.
Excellent. All right.
Okay, let me get your screen position. There it is. Okay, looks good.
All right, here we go. Let me clear my throat first. Take it. All right, we'll see how long that lasts. Good afternoon, everyone. Today is Tuesday, the 15th day of July, 2025. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for the trial. Just click on that purple button. When you do, it will bring you to this registration page. On this page, all that we ask for is your name, your email, and your phone number. Down here at the bottom, it gives you TradingView login ID. Right? If you don't have a TradingView login ID yet, click on this link right here. That will bring you to this page where you can see. It didn't last very long, but it lasted a minute. To this page where you can watch this video. It's a 3-minute video about how to get TradingView, and click on this link and go get it. All right. Once you get that ID, then you'll be able to get your indicators indicating on your desktop, or our indicators indicating on your desktop. That's it. All right. We had a pretty good day today, I think, right? Yes, it was our best day of the month so far. No, it wasn't. I'm sorry. We had one day better. Anyway, we had some pretty low days. This was our lowest day of the year right here at the beginning of the month. The first day of the month was our lowest day of the year. So that offset the totals to the average so far in the month. If you take that out, make that a 0, and we make this a 9, then the average is all the way up there. Now, let me just do Control Z on that and Control Z on that, put it back the way that it was. All right. So what I was saying was today, if you can read the spreadsheet, you can read all the CFTC risk disclosures down at the bottom. Today on the NQ, we're up 133 ticks. On the Russell, we're up 13. On the gold, we're up 28. And on the S, we're up 18. So we actually ended at the high of the day on every one of these markets that we're at. The NQ 133 was the high of the day. We stopped out twice on the NQ today. On the Russell, 13 was the high of the day. We stopped out once on the Russell. On the gold, 28 was the high of the day, and we stopped out once on the gold. And on the ES, 18 was the high of the day there, and we stopped out once on the ES. So we stopped out once on gold, once on the ES, once on the Russell, and twice on the NQ. That's what, 5 stop outs out of 28 trades. That's pretty good, I think. Let me just see something. 1, 2, 3, 4, 5, 6, 7, 9, 10. I'm sorry. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27. So I only had one break-even trade today. It looks like. I know we had more than one break-even trade. Anyway. That put us, this morning took 3 minutes and 2 trades to get to the goal for the day. At that point, we're at $1,500, and we took a total of 28 trades. On the month now, we're up $8,937. That's over 10 business days, averaging $893 per our business day. On the year now, we're up $164,402. That is over 119 business days, averaging $1,381 per contract per 2-hour business day. Now, following the 24/20 blueprint, so far this year, if you quit trading when you got the goal for the day and added 1 contract a month, you'd be in your 7th contract right now, and you would have traded just under 15 hours so far this year. Right? In those 15 hours, you would have gotten, if you did everything just like me, right? Just like me, you would have gotten up to $73,962 at this point. So you'd be trading 7 contracts, $73,962, 15 hours of work. Right? Now I say 15 hours of work, but you can see that the actual number of minutes is broken down in here. This month we're having more 2-digit days than we did last month. I think so far we've had 4 2-digit days in last month. I guess we had 4 last month too. But we didn't have any in the 20s last month. So far this month we've had 2 in the 20s. That's unusual. Not a lot of ones in this column yet. Just 2. We're halfway through the month. We only have 2. And last month we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 times last month out of 18 days we got the goal in the first trade. Things shifted a little. That's okay. All right, so let's get into the actual trades. We'll start out with gold. Let's do this. Go all the way back to the beginning. Here we are. Right, so on gold, this was our first trade right here on gold, and we picked up 5 ticks on that one. 2 more there to get us to 7. Then we stopped out. Wait a minute. Get us to 7. Hang on. We got another trade in here. I think it was this one right here. We got 20 ticks on, and that got us to 27. There, I think. And that got us to 27. And then we stopped out, and that brought us down to 12. And then we had a 10-tick trade there that got us up to 22. And then a 6-tick trade here that got us to 28. And that is where we need the trading for the morning session. Now, if you look at this, you see how far away from the midpoint everything was here as price just kept going down without pulling into the overbought. Finally got into the overbought here, it reset everything. Didn't give you a trade right there, but it did give you one right here. This was a really nice trade right here you could have taken. Okay, the next one was over here. That wouldn't have been any good because it was nowhere near the midpoint. Got up through the midpoint, so you wouldn't have done anything in there. You could have taken this one right here for a good trade. This one right here for another trade. That would have been it on the short side. Going on the long side, it was anywhere near the midpoint, so nothing through there. It went through, nothing through there. I wouldn't have done that because I wouldn't have done that. I would have tried to do it on a pullback, but it didn't pull back, so I wouldn't have gotten anything with that. This was a good trade right here. This was a good trade right here. Nothing there because the first one didn't make it down. It was nowhere near the midpoint here. It didn't make it into the oversold, so the next one that came out of the overbought doesn't matter. Nothing all the way through here. This is where it came out of the oversold right here. That is a trade I probably would have taken. It would have taken some time, but it would have made it. And then right here, right there. That's one of the ones I would have done on a pullback that would have worked out. And that was it for the gold. We ended up with plus 28 on the gold. Right. The Russell was pretty slow too. A lot of small gains on this guy. Right, the first one on the Russell, we had plus 10. That was our big gain. Then we had a minus 15. That brought us to minus 5. Then we had a plus 8. That got us up to plus 3. And then we had a plus 1, got us to 4. Plus 3 got us to 7. And there's one more in here that goes from 7 to 13. It was at the end. Plus 6. Might have been right here. I think it was right here. Plus 6 right there. That got us to 6. They got us to 13 overall. And that was where we ended it on the Russell. Now during the break, just follow along with me here. When it's pulling away from the midpoint, you're not going to have a trade. It's got to come up, get into the overbought, come out of the overbought, then come back into the overbought, and then give you a trade. Right? This down close here, I wouldn't have done because it wasn't close enough to the midpoint. I pulled through it. I wouldn't have done any of that. Turned around, got all this. That wouldn't have been a trade there. It didn't hit the midpoint. Turned down, wouldn't have done anything in here. Turned up, didn't give you anything. Turned down, didn't give you anything. Right in here, right here is a trade, the first trade that I would have taken right here. And that looks like it would have stopped me up. Just sliding through here, looking for where it pulled back to the midpoint. This one right here might have been an aggressive trade that I took right there where it closed on the midpoint and went into the oversold at the same time. That would have stopped me out. So far during the break, 2 stop outs. And that was pretty much it. That was pretty much it. So the Russell didn't have a ton to offer today, right? The ES, we'll go back to the beginning of all of this. Here it is. On the ES, our first trade here, we picked up 8 ticks. That right there is where we got the goal for the day. Then right after that, we stopped out to -2. Then we had a +4 there that got us to +2. Then another +4 that got us to 6. Then a break even. And then a +8 that got us up to 14. And then there's another +4 in here somewhere that got us up to 18. As we went through the end of the session, it was probably, I think it was right in here. I think it was right in there. This long drawn out trade right in here, I think. I thought it was. Maybe it was over here. Yeah, maybe it was this one over here instead. But I ended up with +4 ticks, and that was it for the yes. Now during the break, this would have been a decent trade. This came up and hit the midpoint and gave a down close without drawing midpoint down. That would have been a trade. That probably would have stopped you out to the tick. It didn't make it into the oversold, so you don't have anything else in that direction until it does. Then you have this one right here. That would have been okay. This one right here would have been break even. Didn't make it into the oversold, so you don't do anything until over here. That wasn't a trade. And then you wouldn't do anything there either. Right, and that was it on the yes. So there were a couple opportunities during the break. And now we have the NQ. NQ. Let's go all the way back to the beginning. All right, on the NQ, our first trade here on the NQ, we picked up 45 ticks. Then Our very next trade, we stopped out. That got us down to 20. Then we picked up 16. That got us to 36. Then we stopped out again. That got us down to 11. Then we picked up another 45. That got us to 56. And we got 34, I think. That got us to 80, or 24. That got us to 80. Break even in there. So I guess it weren't very many break even trades. From 80 to 84, then 84 to 129. So this had to be in the 45 right there. And from 129 to 133. And that is where we ended it on the NQ. All right. Jeff, so it needs to actually hit the midpoint, the black line, before we consider taking the trade. If it doesn't hit the midpoint, Jeff, like, let's find one that didn't hit the midpoint. One that would have been a valid trade. Oh, I mean, like anything, no, that wouldn't have been a valid trade. Hang on, let me find one. There's got to be one in here that was exactly what we're talking about. I'm looking for a flat spot here where it pulled back pretty close to it. Where it also came out of the right side. Looks like I got most of them that did that. I got most of the trades that triggered in here. We'll find one for you. You just wait. I want you to see it with your own eyes. There was one on the ES a minute ago. I saw one over there. Something like this, right? Nope, like this. No, that actually hit it. Gosh, that wasn't it either. All right, maybe the NQ is not the market to look for this on. Well, this is sort of it. You see how far, you see how much space there is in between right there and there? You know, I usually tell you, that's what I was trying to do today when I was doing the math for you while the bars were creating themselves, while they're being created. I was saying, okay, that's too far away. Like this one right here, for instance. It didn't hit the midpoint and it came out of the oversold. This is pretty much a perfect example. It didn't hit the midpoint and it came out of the oversold. In a case like this, I would have said, okay, it didn't hit the midpoint. And you might remember hearing me say this in the morning, Jeff. It didn't hit the midpoint, so I'm going to wait for a pullback, and that will put my stop beyond where the midpoint was. Remember me saying that this morning? So it didn't hit the midpoint. So, you know, I'm going to take the trade. It's got a little more risk to it because it didn't hit the midpoint, so it's not really bouncing off support. But I'm going to wait for a pullback because if it did bounce off support, then my stop would be down here. So if I wait for a pullback, then my stop's still going to be in the same place. So if it does end up coming down and bouncing off support, then I'm still okay in the trade. Okay. I mean, there's a little more risk to that. I'd like to have it actually bounce off the midpoint every time when it's, you know, when you're taking a trade. Bounce off it and go in the right direction. It was hard for me to find one that did that little bit. It was easy on the ES. I found like 2 or 3 of them on the ES. I think I might have done one by accident this morning. But like this right here, you know, it came up and it didn't hit the midpoint there. So I would have said, okay, wait for a pullback on the next bar and the deal. Excuse me. And the deal with it is, if it goes far enough to get your stop to break even, then just forget about the trade altogether. You know, before it pulls back, then just forget about the trade altogether. So this is like another one right here, where it almost hit the midpoint right there, but it didn't. It gave you the down close. It was a few ticks away, and it even went up one more tick there. It was pretty close, only 2 ticks away from the midpoint. But it was okay. We're coming out of the overbought. We're in a downtrend. We're coming out of the overbought. It did a decent pullback, but it didn't hit the midpoint. I would wait for a pullback on this and enter it here. That way my stop is going to be up here. You know, whereas if you entered it down here, your stop is right here, right at the midpoint. And you would want your stop to be above the midpoint. Okay. Yeah, Bob, it was, in some of the markets, it was pretty tight. So then you get, you know, the full benefit of it right here. Your stop is a little bit higher if you get it on the pullback. But I only do that when it's not actually hitting the midpoint. Okay, when it's getting close to it, but not actually hitting it. But most of the time, you know, I like to hit it and then close the right way. And while we're talking about it, like this close right here is above the midpoint where it came out of the overbought. I wouldn't have taken that trade. Okay. just so we're clear on all that. Like this right here would be a great trade right now. Down close on this. I'll take that if I can find my Tom. What market are we in? We're on the NQ. Okay, so there it is. I can take it, and I just did take it. Here it is. Okay. Now that should work out in our favor. It should get down to the prior swing low anyway. Right? We need 10 ticks in profit. So from 375, it's going to get down to 125, I think. And there it is. Stop to break even. All right. So we can drag this down, and this is one, Dwayne, that can be dragged out. I'm gonna lock in some profit on that. We're in at 375, so I'm in here. I got a 45 tick profit target on it. I'm gonna lock in some more on this. 375. Then we just hit all 45 ticks on that. All right. That one right there, Dwayne, at 116 is one that can be taken out too. That was exactly what we're looking for. All right, came up, it hit the midpoint, you gave the down close, you're able to put the order on, get it all ready to go. The stop's a little bit above the bar that got you into the trade, and 45 ticks, just like that. She asked me that. Okay. All right, so it's setting up another one right here. We need an up close on this bar to get us into the overbought. And once we get into the overbought, we may have a chance for a trade. It doesn't look like it's going to be close enough though. See, the bottom of the bar is right here at 92. So 97.25 is where the top of the bar is going to be. 97.25. That would be right there at the midpoint. So I could short it right there at the open. That was right below the midpoint. Okay, so I'm going to let it hit. I'm going to let it hit the midpoint like that and look for the down close right now. Right, so this is what you're looking for. Even this bar is okay because it's going to close below the midpoint. So 5 points below the top of the bar. Still 5 points below the top of the bar. If it closes up, it's going to be too far away. But all right, now it's going to be too far away. It's going to put a down close right here above the midpoint, and I'm not really interested in that. Do you see that? That was the thing I was trying to show to you, Jeff. If it gives you a down close that's above the midpoint, then the midpoint's going to act as support. So just don't bother with that. Right. And that's what I said right here. Okay, so it's getting too far away. Now the down close is going to be above the midpoint. If it would have happened on this bar before this bar closed up, then the down close would have been here at the midpoint or below the midpoint. But as soon as that bar closed up, I knew it was going to be too far. And let's see, I just stopped out right there, right? This one, it's easy to see. Just got to reject it. Take the easy and obvious trades. There's another one for the video. 116 to 118. Remember that. Val, are you in here? I don't think she is. No, she's not. Over here on the ES right now, the down close of this is going to be above the midpoint. 97.50 down to 95.50. It's right there. It's so close, but it's still above it. The Russell won't be though. The Russell's okay. Russell's good where it is. Russell got the down close right below it, and he came out of the overbought. So I took the Russell. I left the ES alone. I didn't take the NQ. Now the Russell's going to break even. Okay, I'm going to lock in a little profit on the Russell. Lock in 5 ticks profit on the Russell. And it should go down to 26.4 right now. 26.4. That's the low of the day and right below my target. But we'll take 5 ticks on that. Okay, so you see how all these things are coming together, showing you what not to do and what to do. So we had 2 trades that showed you exactly what to do, and 2 trades that showed you what not to do. Don't take that because it's above the midpoint. Don't take that because it's above the midpoint. Take that because it's below. Take that because it's below. Pretty easy stuff, right? I think. It's worth watching in the afternoon. If you don't have all this stuff on your charts, you could just watch this stuff in this session and make money. All right, it is 120, 120, and we're about to have a trade over here. That down close right there, it's right at just a little above the midpoint. See, this pullback was over 100% retracement, so it had to reset the midpoint, which it did do. But I don't like that right there. It's still just a hair above it. You see? Spread it out. You can see it a little better. It matters. Little things like that matter. Right? And it's not that this midpoint is a moving average or anything like that. It's not. But the way that a lot of the automated algorithms, what they're looking for is failure. And if you can see that, you can see the failure happen. Don't be a part of that. Wait until it shows a success or it breaks through. All right. So we wait. We have 8.5 minutes left here. 8.5 minutes. Now, this down close, if it was coupled with coming out of the overbought, this down close here would be something to be interested in. Right? This here is coupled with it coming out of the overbought, but it's not a trade because when it came out of the overbought right here, it didn't make it to the oversold, so it's showing weakness. You see how all the pieces come together? The same thing with this one. This did not make it to the oversold, so there's nothing here. Now this one finally made it to the oversold, showing a little bit of strength on the downside. So be looking for another trade there. I don't think if it pulls back, I don't think it's going to give us anything on the short side. I think it's going to flip the YVR to the long side. That's what I think you're going to see. And it is going to flip the YVR. One more tick up, and it'll definitely flip it. There it is. It's going to flip the YVR. The ES is too. And Q just did. So now you just wait. Okay. While this is going up, while the ES is going up, look here and see any numbers over here that jump out at you. That 6,300, 6,301. On the upside, that's where it's trying to go to. 6,300 and 6,301. All right, the low of the day is right here at 91.25. This is the low of the day, but it's trying to move up right here. Okay, see that flip the YVR? This is going to flip the YVR when the bar closes. And the gold, if you go to down close here on gold, you'd be at the midpoint in the oversold. So you have potential for a trade there on gold. Okay. We're oversold. We had an up close and it went down into oversold. So you could actually take this trade right here, right where it is. Okay. You could actually take this trade right now. And it's an up close off the midpoint right there is what that actually is. It's an up close off the midpoint while it went down into the oversold. It's kind of a weird trade. It happens a few times. It doesn't happen very often, but once or twice a day, it'll happen like that. Okay, but that's a valid trade. I'll bring it over. Here it is. Needs 5 ticks in profit. 5 ticks in profit. Just gotta get up to 0.1. There it is. Stop to break even. +2. Should make it up here to the swing high. 38.5. Just ignore with +2. Okay. So following the rules, we've had 3 successful trades here. So if you did nothing else today, you just took those 3 trades that I just took. There's 20 bucks on that one. There was $50 on the ES trade and 50 bucks on the Russell trade. I think, did I get 5 or 10 on the Russell? That was 25 on there. So it's almost the goal for the day between those 3 trades that I did take. Okay, and the NQ is actually going, triggering right in here right now. it's at the point right here. You could just about take it right here. The down close being at the midpoint and going into the oversold at the same time. That is a trade that I like to take. It's right at the midpoint and going into the oversold at the same time. You could wait for the conservative trade and the up close right here. If you waited for the up close, it should still be okay. It should still be on or above the midpoint. Okay, right there. If you get the up close on that part, that'd be okay. So we'll see if we get that. And it's now 125. It's gonna be great if we got that. The Russell's almost got a trade here too. The Russell needs to go down one more tick and then give you an up close. So it could happen on this bar on the Russell. Right, and there it is on the NQ. So here it is on the NQ. And we need 10 ticks in profit. So it's going to go up to 1675. 1675. Stop to break even. And there it is, 1675. Stop going to break even. I'm going to lock in a point here. Okay. Because that, between the four markets, that would be enough to get the goal for the day. I had a point there. That's $20. I had a point here. That's $50. I had 5 ticks here, a half a point there. That's $25. And I had 2 ticks there. That's $20. So I think that's 115 altogether between those four markets with one contract. With 10 contracts, it's $1,150. Right. Pretty simple stuff, right? The same thing over and over and over and over and over again. This isn't that hard to do. So I took 4 trades and I had 4 wins. And that's not unusual. And what did I say about this morning? I took 28 trades this morning. And I had 5 stop outs out of the 28 trades. That's less than 20% stop out. Less than 2 in 10. So I'm just waiting. Just waiting. No trade here. Okay. If it stabilizes a midpoint and it pulls back again and gives you something off the midpoint, then that might be something I'd be interested in. Same thing with the other ones here. The gold didn't continue up away. So the gold's coming together kind of weird because now you could take a conservative trade on the gold. But this last one looked like kind of a conservative trade. Remember, it closed up on a down close down here. The bar closed up. It was an unusual trade. You could still take a conservative trade based on the same leg length right here. Showing a little bit of weakness right here. It'd be a little bit risky trade, but be 10 ticks above the bottom of the trade is where you'd be buying. 1 minute left, so I'm not going to do it right now, but that is what you would consider. All right. Does anybody else have any questions at this juncture about anything? Jerry L, Robert C. There's the up close. Okay. All right, so let me show you guys. If you have not taken a free trial with us, go here to mytradingiq.com and click on the purple button. There's no credit card required for the trial. Click on that purple button. It's going to bring you to this registration page. Just fill out the form. Down at the bottom, make sure you give us a TradingView login ID, all right, and hit the register button. If you don't have one of those, click this link right here and go get one. All right, that's going to bring you to this page. Watch this video, click on this link, then just go get one. All right. All right, and that is going to be it. With that, I'll wrap it up and pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne is ready.
Yep. Recap of the morning session.
And today it took 3 minutes and 2 trades to get to $1,500 with 10 contracts on.
Good job.
Thank you very much.
All right, guys, let's pick up where we left off. We made it through the ES. In fact, let's go back and take another peek at the daily. Okay, we're still just below the black step line. Okay, the next major support is going to be at the 50% fib extension. We'll call that 62.75, and then yesterday's low. Come on. 62, we'll call that 62.60. 59.75. Okay, so the ES, when we last looked at it, it had hit the zone. And remember, when price drops to a weekly zone, we expect support until proven otherwise. So we got a bounce up into red and falling, which is bearish and potential resistance. In fact, you've got resistance times 2 because you've got the black step line directly overhead and red and falling. Now, the step line attempted to cross red and falling, and it is actually on the right side, but typically when it makes that move, it'll look something more like this, okay? Or like this. And when that happens, you expect a retracement to the VVC, which is exactly what you got. But it kind of looks like the step line is going to head back to the left side of red and falling. Now, if this candle, this current 30-minute candle, if it closes up, then we'll most likely get a retracement back to the VVC. Price always reverts to the mean, and the pullback holds more often than it doesn't. Like it did here, and here, and here, and here, and here, and here, and here. But eventually it will trade through, and when it traded through and found support in the zone, the pullback, see, all of these were pullbacks from above, but this was a pullback from below, and the pullback held. So we found support at the zone, bounced us up into potential resistance at red and falling. So a good opportunity from here would be selling 62.98 down to 96. The zone's 95.96. That would be 2 points goal for the day. If price does continue up, this candle has 27 minutes left in its lifespan. So a lot can happen in 27 minutes. We could run all the way up and tag the VVC, and then we'd have a whole different setup on our hands. But if we're unable to overcome this resistance, then, I mean, it's just pretty clear. 28 down to 26. Okay? Then if we were to take out the low of the day, right here, then the next stop would be the short target based off this low right here, market structure. Okay. The Dow. Again, these targets that you see are the ones I showed you at the beginning of the broadcast. These guys right here. All of our traders and trial members had all of these targets 5 minutes before the market opened last night. Okay. So, the Dow, we opened above the BVC, and the very first candle we dropped below the weekly zone. Now, only one of 3 things happens when price encounters a weekly trading zone. We've published these zones now for 15.5 years. They come out Monday morning, 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. So, 70% of the time, you're going to get consolidation. Like that, like this, even like this and like this. 20% of the time, you'll just get rejection. Price hits the zone and just gets rejected. 10% of the time, you get what's called the slice. That's when the 30-minute candle slices through the zone like it's not even there. When that happens, what typically will follow is as the move runs out of steam, price will retrace back to the zone it sliced through and then continue in the direction of the slice. This isn't a picture-perfect example, but it'll work. Gives you the idea. So this was the opening candle. We pulled back to the BBC. The pullback held. And we ran all the way up to the zone at 44,815/820. The high was 827. So we spiked it just a little bit. Then we came right back to the BBC. Price always reverts to the mean. Okay, so support will send the market looking for resistance. Not a spot, I would typically look for resistance. Okay. Again, no one knows what's going to happen next in the market. But once you learn to read the chart, you understand the language of the chart, you understand how price flows, you understand how to use our indicators. You know with a great degree of certainty what the next high probability move is, which is as different as night and day from somebody saying that they know with certainty what's going to happen next. Okay? When somebody tells you that, they're more interested in your money than you are. Now, this candle here not only hit the long target, but remember this is Tuesday, vertical line, this is Monday, vertical line, this is Friday. On Friday, we drew in 20-point window of opportunity, and that filled. Right there. See it? And this 30-point window, which we drew on Friday, which was actually based off of Thursday's price action, that filled. Back to the BBC, we bounce back to the weekly trading zone and the BBC. This time we trade through, but the pullback holds. And then we get another leg, and then a retracement. Now, this candle closed here. After we hit the long target, once, twice, 3 times, 4 times, 5 times, 6 times, 7 times. Now this high right here, you look left. You see that? My point is that you should be right where this candle found its high. You should be expecting resistance there. Why? Well, because the last time price hit that area, it was resistance. So you should always expect previous resistance to be resistance until proven otherwise. Okay? This is just a picture-perfect example. And then down we go all the way to the short target. Now you only need 20 points in the Dow to get your goal for the day. So whether you got it going up or coming down, plenty of opportunity. The step line is crossed red and falling, just like on the ES. Price is trying to move higher. Okay, it's actually traded above the black step line. So it's got to overcome this resistance here. Then there's potential resistance here, potential resistance here. But eventually, price will find its way back to the BBC because price always reverts to the mean. See, we overcame it here. So where are we headed? Back to the BBC. The question then becomes, will the pullback hold or not. All right. Cover the ES, cover the Dow. Here's the Russell. This was the opening candle last night. We just kind of wandered sideways. We're bullish because we're above the BBC on the 30-minute chart. And price took off right here, 21.30. Just like the ES, just like the Dow. 4 major indices typically trade in tandem. Okay. Now, there's no one market that always moves first. New traders are always looking for that. Oh man, if I can just find the one that moves first, then I can trade the other one. I'll be in Fat City. No, doesn't work that way. But anyhow, we hit the long target. We spiked the weekly zone, but quickly came back. Resistance. Okay. Now, this high right here. You look all the way back to Friday. See this resistance here, the bottom of this window? That's that. Now, this window here got filled here. Pull back held, back to the long target. This pullback held, it's like, well, wait a minute. The red candle's below the BBC. Yeah, but it's still touching. Price has to pull away from the BBC for you to say that it didn't hold. So it held, sent us back up, and we put in a slightly higher high. Now, we're always suspicious of a slightly higher high. We did take out this high, but not by much. Okay. And then look what happened. Down we go. And on the Russell, the step line is attempting to cross red and falling. But we're at the zone, and it looks like we're printing a red candle. Now remember, when I gave you the numbers around the world, the Russell was down 21 points on the session at that time. It's down even more now. So you need 2 points to get your goal for the day. So 22.31 down to 22.29. That's it. You're done. Put the mouse away. Go do life. 22.31 to 22.29. That's where I would typically draw in that window of opportunity. By popular decision, you guys decided you wanted a string of numbers rather than windows of opportunity. So my goal is to please. This low is yesterday's low. Market structure. Now with the Russell falling, ES is attempting to bounce. Oh, but see what's happened? Now we're back below red and falling. We had a nice green candle going. So 98 to 96. That's your trade on the ES. On the Dow, 330 down to 310. That's all you need to get your goal for the day. Russell, we just covered. Here's the NQ. This was the opening candle. Price came right back to the BBC. Price always reverts to the mean. The pullback held. And we ran up to the long target, through the long target. Found resistance at the zone. Resistance always sends the market looking for support, which it found at the zone. So we went from zone, back to the zone, back to the zone. We did trade slightly higher. and nothing in immediate recent history. If we go back far enough, you'll figure out why. So now we had a new all-time historic closing high yesterday on the NQ, I believe. Yeah, that's what I read. And so we'd put in an even higher high today. Now, that may be the high right there for a while. It's a thing, lower prices are coming. Right here, see how red and falling has crossed below the BBC? It's called a bearish cross. 23,115 to 23,105. It's 10 points, $20 a point. It's $200 per contract traded. Now that's just a simple, safe, conservative trade. Okay. If price starts cooking to the downside, remember the Nvidia was the only one in the green when I gave you the numbers from around the world. That had to do with Nvidia. But I think that euphoria has worn off. We're up against resistance at the zone. Okay. So look for price to drop and then take advantage of this nice little window of opportunity here. If it's a strong move, you can stay with it. Expect support here, here, and then here. And if we get through the top of that long target, then at the zone. And then right here you have a bullish cross. Actually, no, that was just a pullback. We didn't really have a bullish cross there. Bullish cross looks more like that. And a bearish cross looks like that. Now, when you have a bearish cross, it leads to an extended move. The first time price revisits that area. That would be this candle right here. Will almost always be good resistance. And it was. Sent price all the way back down to this zone. And then it bounced, and in 30 minutes, it was back up here. A leg and a retracement, a leg and a retracement, a big leg and a retracement. And right now it's just sitting still. Not doing much. Okay. All right, that covers the indices. Here's crude. Fundamental reasons have put a lot of pressure on crude. Oil companies need crude to be over $70 a barrel to be profitable. But this was the open last night. We wandered sideways for a little bit, and then we dropped to the short target. Then we got a retracement, but there wasn't enough interest to even get it all the way to the BBC. We come back to the short target, actually trade below it, then we get a retracement. Now we spiked the BBC pretty good, but the pullback held because both of those candles are still touching the BBC. Supported blue and climbing, pushed us up to this high here, which is just shy of this high right here. So that's a sign of weakness. And back we go to the short target again. And then just a lot of sideways consolidation. Now we're trading below. We've got a bearish cross here. So by the end of the session, we very well could be at the second to the lowest weekly trading zone on crude for the week. And it's only Tuesday. Gold. Here's where we opened. Ran up to the BBC. Blue and climbing was chasing price. So we consolidated there for an hour and a half. And we punched through. Pulled back to the BBC right there. The pullback held. And that was enough to send price all the way up to the long target. Now, let's say you want to be real conservative. And you wait to enter on this candle. Okay, you want a nice solid close above the zone. Price is always trying to get to a weekly trading zone. If price is above the BBC, it's trying to get to the zone overhead. If price is below the BBC, it's trying to get to the zone below. But there's always obstacles in the way, like right here. See this bearish cross from yesterday, where the red line got below the green line? That's why that became the long target. And look what happened. We got a double top right there. We expect that to be resistance. A bearish cross that leads to an extended move. The first time price revisits that area will almost always be good resistance. Now, a bullish cross, okay, where the blue line gets above the green line and leads to an extended move. The first time price revisits that area will almost always be good support. See the bullish cross here? Look at the horizontal line on my cursor. We spiked it by, I don't know, maybe a point. And we're coming back down to challenge it again. Now the second time back down, if that's what we do, we may take out this low. Then you got potential support here and here. Now this is Tuesday, this is Monday, this is Friday. I'm looking all the way back to Thursday's price action. Okay, market has a memory. And you've got it laid out right in front of you. This 3-point window that we drew on Friday, the long window filled yesterday, the short window filled today. Right here. So right there. Now we're below the short target. And $33.30 to $33.28. 33. Write it down. $33.30 to $33.28. That's $200 per contract traded. $100 go for the day per contract traded. So while that's a potential $200 profit opportunity, if you've earned the right to trade 10 contracts, then it's $2 grand. You got potential support right here at this low. If it breaks that low, then there's no reason in the world for it not to go to this low. Okay. All right. Hit the long target twice, hit the short target twice. Now I started to say here, if you wanted to be conservative and you waited to enter long on this candle, knowing that you've got potential resistance overhead at the previous bearish cross, this candle opened at 33.67 and it ran up 7 points. From the open of that candle to the target. Actually, because it opened at 67.1, $690 per contract traded. With 10 contracts at $6,900. Price comes back to the BBC and runs right back to the long target again. That's such a powerful dynamic. Always watch for it. Now, does it happen every time? Very few things happen every time. Does it happen more often than not? Oh, you better believe it. That's why I bring it up so much. Because I want you to grasp that. This is such an important concept. Okay, we got one last market, silver. Now, look at this massive, there's almost a $15,000 run in silver. When the price of silver moves $1, It's worth $5,000 per contract traded. So we got the bullish cross back on the 9th. Okay. And we're trading around 36.60. So at 37.60, that's $5,000. At 38.60, it's $10,000. At 39.60, which we missed by 4 pennies, $15,000 per contract traded. And now the retracement. When you have a huge move like that, you got to expect the retracement. So we opened here last night. We're below the BVC. Price attempts to pull back to the BVC, but then we get a close below the step line. This candle opened at 38.47, and from 47 it dropped to 20. That's 27 pennies. It's about $1,300 per $1,350 per contract traded. When the price of silver was $1, that's worth $5,000 per contract traded. You only need a 2-penny move to get your goal for the day. Now the step line is crossed at the weekly trading zone. Step line is directly below price, so you've got support times 2. Red and falling is directly below price. So, barring any unforeseen circumstances, price will rally back to the BBC. And we've had a very substantial pullback, so this may be it. If we close above the BBC and you trade along, keep in mind you got a bearish cross right here. Okay, red line got below the green line. So if price can get above the BBC and start a rally, look for resistance right here the first time up, 38.55. And then the zone, 38.64. One last look at the daily. Okay. We got a doji. We had balloon climbing, which we know is more often than not resistance when it gets directly above price. We've been consolidating sideways now for, what did we count earlier? 8 days. 1, 2, 3, 4, 5, 6, 7, 8. Nope, we're on our 9th consecutive trading day. Trading in this little range right here, between the 50% fib extension and the 62% fib extension. How we close today would be very important. If we rally into the close, that could happen. I would be surprised. If we move lower, got support here, then at the low of yesterday, and then the daily BBC. To become a member, send an email to support@cfrn.net. In the email, just say, I want to become a member. Valerie will send you an email that explains what it means to become a member. If you're a veteran, we want to thank you for your service, so say, I'm a veteran and I would like to become a member. Because along with the information on what it means to become a member and all the things you have access to, she's also going to send you a link that you click to seal the deal. And she'll provide you with a generous discount. Again, to thank you for your service. 2 hours of live training every trading day. 9:30 a.m. to 11:30 a.m. Eastern. It's an interactive environment. This is where you learn the methodology. This is where you learn the strategy. Real trades, live markets with real money. While you trade along in your demo account so that you can qualify to go live. The 2420 blueprint, which is one of the first things you'll receive once you become a member, it's designed to help you go from 1 to 20 contracts over a period of 24 months. You don't come in trading real money off the bat unless you want to just blow up another account. Our goal is that you don't blow up another account. So a lot of people, it stings their pride. It's a humbling experience to go trade in a demo account or a sim account because they've been trying to be profitable for years. They've spent tens, in some cases hundreds of thousands of dollars buying stuff and blowing up accounts. God loves a humble man. Humble yourself and do what the 2420 blueprint says. Put together 10 consecutive days in a row where you reach your goal in 10 trades or less. If it takes you 10 trades each day to get your goal, after commissions, you're still profitable. Now, hopefully it won't take you 10 trades every day to get your goal. If it does, then there's something amiss. So, along with the group training, 2 hours every trading day, private one-on-one mentoring, all you got to do is ask. Strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETF, it doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. It's just how markets work. As a passport holder, you get the Logic 247 alerts around the clock. You get the concierge trade alerts the second they're published each evening, typically 5 minutes before the Globex Open at 6 p.m. Eastern. Monday morning, 6:15 a.m. Eastern, you get the weekly trading zones. We've published them for 15 and a half years, every week. Once they're published Monday morning, they're carved in stone the entire week. They do not change. And every Thursday afternoon, you will get an invitation to attend the members-only workshop Thursday night at 8 p.m. Eastern. So you got 2 hours of group training every trading day, private one-on-one mentoring at your request, and a members-only workshop every Thursday night. Plus, you have around-the-clock support via Telegram. Which brings me to my next point. When you become a passport holder, you will get the golden key that opens all the private channels in Telegram. There's public channels and private channels. Public channels are for the people on the trial, so that they can actually get the alerts, get the weekly trading zones, and talk to our traders. Ask them what their journey's been like. How long did it take them to get it? Okay. Ask them, was it worth what you paid? The costs have become a passport holder. Once you nail the methodology, the strategy, learn how to read the indicators, you can make that back in a week. But this is not a get-rich-quick scheme. You got to show up every day. You got to do the work. This is no magic trick, no parlor trick. It's a job. Now, some people don't want a job. Some people want to live on hopium. Oh, this guy says if I go join their thing, they're just going to give me trades and I'm going to make all the money in the world. How many times have you fallen for that? It didn't happen. The only way to become a successful trader is to learn how to trade. Period. And even if you got some guy who's giving you good trades and you're trading them and you're doing okay, what happens when he has made enough money and no longer needs you? Then what are you going to do? You see, when you learn how to trade, that's something that nobody can ever take away from you. You learn to read the chart, you learn the strategy, you learn the methodology, you learn to read the indicators. You're good for life. Everything a trader needs, all under one roof. One low price. It's a good deal. I checked. All right, let's wrap it up with a good word for the day. Yesterday, talked about don't lose your passion for God. That no. Yesterday we talked about respecting our differences. Today we'll talk about not losing your passion for God. John 2:17. His disciples remembered that it was written, zeal for your house will consume me. Try to imagine the fire in the eyes of Jesus and the flex of his muscles as he turns over the tables of the money changers in the temple. Now, if you don't understand why there were money changers in the temple, people came from all over to worship at the temple. And pre-Jesus, you needed a sacrifice, a burnt offering. So, if you're traveling a 7-10 day journey, it's hard to bring a fatted calf or a lamb with you, right? So when you get to the temple, you need to buy something to sacrifice. Well, because people were coming from all over, there was no standardized currency. So this is the money changers, okay? There's a reason they were there, but Jesus wasn't happy about it. Because Jesus was the wisest and kindest person who ever lived. Additionally, he was the most passionate. And those who follow him ought to be the most passionate people on earth. Are you? The word enthusiasm comes from two Greek words, en and theos, meaning in God. And the more you get into God, the more passion you develop about the things of God. Psalm 37:4. Delight yourself also in the Lord, and he shall give you the desires of your heart. Now that doesn't mean he's going to give you everything you want. I've heard that scripture mispreached so many times, especially in the houses of the prosperity gospel. When it says that God will give you the desires of your heart, that means he's going to put his desires in your heart. Boy, that changes the whole meaning of everything, huh? And if you've succumbed to the priority gospel, this is a huge wake-up call. Because I'm telling you what the scripture actually means. Yes, you're supposed to crucify your carnal desires daily. But God doesn't go away with your capacity for desire. He sanctifies and redirects it. When you delight yourself in the Lord, you get a desire transplant. You want different things. You want what God wants. C.S. Lewis said, "We are half-hearted creatures fooling around with drink and sex and ambition when infinite joy is offered us." A pastor adds, "Sin is a waste of energy, and it's a double waste. After you waste your energy on things like lust and pride and anger, then you have to waste even more energy on things like guilt and shame and regret." Nothing is more de-energizing than sin. But by the same token, nothing is more re-energizing than obedience. God loves obedience far more than sacrifice. Obedience is pure energy. And that's our good word for today. It's got a news pop up on my screen. What does it say? Ex-Goldman exec says crypto regulation will unlock trillions and help the U.S. solve the deficit. Well, how about that? Hey, thanks for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.